Stable modernization first is about priorities for the FI. We talked a lot about risk management within a comfort zone for the FI based on its strategy and its existing technology stack. What's important for the financial institution to do in this context is to say, we know and understand everything that's going on with our technology and are able to say we have, within a reasonable degree of certainty, an idea of what's going to happen when we make certain changes and what's going to improve and what possibly could be our downside risk of making this change.
The Digital Banking Podcast is powered by Typhon. Typhon is the creator of Infinia, a dramatically better digital banking platform for community financial institutions, as well as several platform-agnostic, revenue-generating point solutions. Our highly configurable platform and broad ecosystem of third-party partners ensure our entire suite is scalable and extensible to meet the needs of any FI. On our podcast, you will hear host Josh DeTar discuss today's most pressing financial technology topics with seasoned industry experts from every possible discipline.
You know, your podcast hasn't officially made it until there's ads in it. But this is one you're not going to want to skip past. And, well, if you do, feel free to hit that fast forward 15 seconds button twice. Ever wonder what gives me my energy and enthusiasm during these podcasts? You know, outside of my relentless desire to learn about, connect, share, and build up community FIs and their mission to support the communities they serve? It's coffee, and lots of it. Now, you want to know what's better than your regular old coffee? How about donating $5 to the Children's Miracle Network hospitals through Credit Unions for Kids every time you purchase high-quality, ethically sourced coffee that also provides living wages to coffee farmers? So if you want to listen to this episode with epic levels of caffeine-induced focus and help kids in need, head to javaforkids.org to learn more and buy a bag or 10. Thanks.
Welcome to another episode of the Digital Banking Podcast. My guest today is Tyler Brown, a senior research analyst at CCG Catalyst. As Tyler was making this statement, I thought, what a perfect and fun way to give you some context on Tyler's personality and what you might expect out of today's episode. He said, I love the idea of travel. Looking through brochures, hours of endless research, diving deep into Wikipedia rabbit holes, planning it out meticulously, imagining what each element of the trip will bring to the experience. Honestly, it's almost better than the trip itself for me. You see, deep down, while his personality today as a thought leader will come out as extroverted, he's really a total introvert. Tyler said he'd be perfectly content living in a dark cave, just reading books and researching things for the rest of his life. However, you kind of have to earn a paycheck, and that's not a great way to do it. So he channels the buried extrovert side of himself and the constitutionally research-focused side of himself to bring out the thoughts in his head to create thought-provoking dialogue for discussion and debate. While he says he tripped into this industry, I can say firsthand that if you subscribe to his email research newsletter, you can see how immensely passionate he is about bringing insightful intel to community FI operators so that they can focus on the day-to-day, and he can help them see a full 360 picture of what's happening both in and out of our industry. Tyler has his finger on the pulse of all the buzzwords, both current and past, and we plan to dive deep into some of them today. So, like Tyler sometimes wishes he could, you get to stay at home and not have to interact with anyone at a conference, but still get to hear Tyler's intel. Although, he'll be the first one to tell you, to really learn and grow and evolve, you can only read so much. You gotta just get out and talk with people sometimes. And while Tyler thinks, would anyone really want to get to know me that well? I can tell you, you would. And you're going to get to a little bit today, and you won't regret it. So Tyler, thanks for joining me on the podcast.
Thanks, Josh. I appreciate that. Happy to be here, and thanks for bringing me out of my shell.
Yeah, well, apparently you do that yourself pretty well. So
It takes a little help every once in a while, just a little nudge.
Yeah, but like we were saying, this is kind of like the prime interaction for people like us who are like, career extroverts. And by that, I mean our career makes us be an extrovert. And this is kind of like the best form of it, because I'm like, yeah, I get to look all extroverted, and really I'm just having a one-on-one conversation with Tyler. So it's kind of managed, and that helps.
Well, look at this. The doors are closed behind me. There is nobody else here. It's beautiful.
It's beautiful. It's perfect. I've been really looking forward to having you on the podcast. And it really came out of a friend in the industry connected me to your newsletter. And what's funny is, one of the questions that I always ask all of our guests at the end of the episode is like, where do you go to get intel, right? And I'm always trying to look for news sources to gather information on what's happening in our industry. And, there's such a wide range of different types of content. And even I'm going to kind of poke fun at myself, right? Like this podcast. I mean, I think our shortest episodes are around an hour, right? So it's a lot of content to try and digest. It's a pretty big time commitment for people to stick around and hear my obnoxious voice occasionally in this. And sometimes, like other people, I just want like a really condensed, like, hit me with the facts. I want to know what's going on, but not just like what's going on, but I really want somebody's educated take on what does that mean, right? And that's what I found in your newsletter. It was really succinct. It's pretty quick. It takes me maybe 60 seconds to read, usually a little bit longer because I have to go research something you said because I'm not smart enough to understand what it meant. But it's really just kind of a quick bite-sized digest, but very impactful in terms of giving me some insight into it. And so, you talk a lot about some of these different buzzwords and things, and like, why is it the buzzword? Why is it the common talk? So what are some of the things that you've been kind of researching lately and writing about, and what's kind of piqued your interest?
Well, when I read, it's as widely as possible, given the number of hours in the day. So I tend to aggregate my news, and when I read, if I'm lucky, it's every few lines, and I try and pull together the picture for myself. Of course, when I'm writing the newsletter for CCG Catalyst, I have to proofread myself, and so it's a good check on whether what I think about the industry is actually making sense and is something that's going to come across in a way that's clear and cogent to a reader. So recently, a few things I've been thinking about and writing about are migration and modernization, two big issues for community FIs. AI, artificial intelligence, has been everywhere as a broad topic. Really never heard of it? Okay. But it's not always easy to understand within AI what matters, what's important, and what the practical applications are. So digging deeper, I think, is important. We've seen problems with BaaS. That's been everywhere, both from a risk perspective, a regulatory issue, and then from a technology and operational problem. Open banking, of course. I think that's been a big one because there's been the policy issue with a final rule coming from the CFPB. But there's also a big technology issue related to particular smaller financial institutions that gets a little bit less attention than the philosophy of open banking and kind of how it has enriched the fintech ecosystem.
I want to start with, you were kind of talking about the just modernization as a whole, right? So what has kind of piqued your interest in kind of just technology modernization as a whole, and how does that parlay into some of the technology choices that CFIs are making? And you talked a little bit about, before we started recording, kind of the pendulum swing of like, do I buy everything from one provider versus best in breed, and what are you seeing there?
One of the things that's amazed me about modernization coming into the financial industry as a researcher is just how hard it is. And what options you have for modernization, whether it's a very tactical approach, thinking about whether you're going to do middleware, for example, or gradual replacement of applications, whether you're going to do a sidecar core with a migration, and then the greater technology strategy and the organizational impetus behind it, because there's a big tendency or a big risk of inertia going forward with what you have, what you've always had, and being too afraid to make a change, even though that may be in the long-term best interest of the institution.
Yeah, that's one of the topics I feel like comes up a lot is the impetus for change, right? Mm-hmm. And what does that actually look like from each institution to each institution? And it's, just given this sheer scale of number of institutions that we're talking about in kind of the CFI space, right? I mean, it's roughly 6,000 to 7,000, depending on what you classify as. Mm-hmm. And that plus just all the different technology choices that they could have made up until this point puts them all in such a wide spectrum of what do they need and want to do, and then what would be the step to get to where they want to go to from where they are now. And for some that may be pretty small and they could do small incremental things. For some that would be a cataclysmic leap. And so just being able to give a blanket statement oh, everybody should do this is not really possible, right? Because your decision for change and what is, your risk appetite for that look like at your institution could be totally different because of those factors.
People issue, tech stack issue.
Yeah. I think that's a big part of it too, right? Is we kind of talked about this in other episodes, how there's almost two main pillars to this quote unquote modernization of the CFI, right? And it's people and tech, right? And you may have people within the organization that are really gung ho about it or not so much. And then you may have technology that's really capable of it or not so much. And any varying combination of that. What have you seen in just some of your research of how are people kind of navigating that?
For CFIs in particular, there's a board level push that has to happen when it comes to modernization. It's all about the greater strategy institution and whether the business strategy supports the technical change that could be very risky for the financial institution, and what ultimately could put the job on the line for people who are involved in technology strategy and implementation. So when FIs look to do this, most often they're looking at a strategy that's going to be relatively piecemeal, taking slow steps toward modernization, because big change, while it's a little bit easier for smaller FIs than it is for bigger ones, carries with it a lot of operational risk that becomes potentially a problem for customers and not just something that is internal, which then snowballs into what can ultimately be a pretty big problem for the financial institution. So what we see is you may have a middleware layer that's going to enable extensibility with new applications, pulling out piece by piece old technology and plugging in what's new, what you can, to the point that sometimes you're running old applications that have been around for decades, but your most recent have just been plugged in, say, the last 2 years. Another big one, though, if we avoid the whole idea of a rip and replace core modernization, is to build something on the side and gradually move over to it. And that may be, for example, building a separate brand that has its own ledger to bring in deposits, and then starting to migrate customers over. It may be just in general operating a core for a different business line entirely, like banking as a service, for example, and making the decision that we can operate our bank as our customers expect it to and as we're used to it happening, and ultimately make this modernization step, but be able to do it over a period of time that we're comfortable with.
You bring up kind of an interesting point, man. I as you were talking, I was thinking about, I feel like there's also this almost weird expectation from us consumers of financial services that I want my bank or my credit union to be super solid and stable, and I don't want them to rock the boat because our entire relationship is built on trust, and I don't want to see you go SVB on me, right? But at the same time, I have this expectation that you move at the technological pace of Amazon and Google and Apple, and I expect all of these things. And you're like, wait, sometimes these things don't line up. Like, if you want me to move at that pace, like, are you an Apple guy, Tyler, or an Android?
Apple guy, it's the golden prison.
I mean, it is. It's just so is. I mean, you're just so sucked into the ecosystem. I'm so screwed at this point. I could never leave Apple even if I wanted to. And they know it. I'm sure they do. They have the data. That's why
I'm not sad about it, at least for now.
Yeah, no, it works great. So, but at the same time, right? Like, how many Apple iOS releases have you had that have broken something? I mean, it's every single time.
Every single one.
Right?
Unless I wait for it. Yeah.
It's never flawless. Ever. And I'm totally okay with it. Right? But man, goodness gracious, God forbid you ever do a rollout of digital banking where one microscopic feature that one Aunt Edna at the credit union uses breaks, right?
Well,
it's a
I
catastrophic
can think of
failure.
Certain regional bank with a big merger recently that had some issues related to digital banking and ATMs and other critical systems that did not go over well with consumers and certainly made it into the news.
Yeah. Yeah. Well, and so there you go, right? Like, then that happens and then everybody's upset. But at the same time, they were probably saying, we're upset that you don't have the latest and greatest. Please do this huge move to do this latest and greatest.
Yeah, it's a tough tension, especially on the consumer side.
Tough spot. Yeah.
It's made me think about that and say, well, on the consumer side, it's going to be expensive to keep your customers because of the digital expectations both set by big tech. And then when you're looking at the larger banks who have the money to invest in the technology and the experience, they can just do it because it's part of the multi-billion-dollar budget. But if you have a smaller FI that's depending on particularly perhaps a core vendor to provide them all of their technology on their roadmap, then it becomes a lot more difficult. Then maybe you have this shift to commercial, for example, where it's a lot more comfortable to handle that side of the business because you don't have this high volume of customers who are coming in and expecting this front-end experience that's happening day-to-day on mobile and has to compete with consumer brands.
Yeah. Yeah, I don't know. But, I was talking to somebody about this recently too, Tyler, where we were just talking about like doing something like an update to digital banking, right? And how, let's say, a small, 10,000 member, chartered credit union is doing a digital banking conversion. And it's a night and day switch from one system to another. And how that inevitably always rocks the boat. And you always get the people that reach out and they're ticked off because you moved their cheese and whatever. But at the same time, they were the same people probably that last week that were, complaining about how you have crappy tech. And you're like, I can't win. Okay, I'm trying to give you the new stuff. But my comment was like, think about Google, for example, right? If you use Gmail, how many times have you just logged into Gmail? It looks totally different, or something is radically changed.
I have lost count.
Yeah, it happens all the time, right? Like, we've set that expectation for consumers from Google. And I think the big difference between Google doing that, there's many differences, but a big difference in my opinion, right, is that when my credit union does that, I know exactly who to call and bitch at. When that Google does that, like, there's no phone number to call Google and be like, I'm really upset about this change that you made in your software. We're just like, well, it's Google. Like, I guess it is what it is. I'll get used to it. And next week I'll be over it.
A week and you'll give up and move on.
Yeah. Whereas I think a lot of times too, right? Like that same kind of thing, again, barring anything catastrophic happening, right? Like a complete outage or you can't access an ATM network or something like that. Barring that, you're going to hear some complaining, but it subsides pretty quickly. And, which of the complaining do you want to hear? You don't have the great stuff, so I'm moving on, or you brought us new great stuff and I didn't like the change at first, but now I figured out how to use it and now I'm satisfied and I'm staying around. I don't know. And that's sometimes hard to quantify, I feel like.
Yeah. But you talked about trust. You mentioned that a little while ago.
Yeah.
It's all about the downside risk. If something really goes wrong with something you have a high amount of trust in, then there's just that bigger fall. And when you're trusting your money, as opposed to pieces of data that may or may not be critical, there's this bigger concern, I think, from consumers, and then this bigger reaction from FIs who are saying, if we make these big changes, well, maybe it's worse if there's even a
Yeah.
small risk of a glitch, because it's going to cause a lot of customers to back away, even if an improvement might cause slightly better engagement or retention among a small group.
Yeah, well, that goes back to what you were talking about with kind of managing that risk, right? And looking at, do I get everything from one provider? Do I get everything from niche providers? Like a part of that conversation is, how do we, one, evaluate and identify risk, right? And then how do we kind of classify that within our institution? And like you were saying, like, is this a high risk, low reward, or a low risk, high reward, or, something in between those two things? And then, making your decision through that, right?
It's like walking a tightrope.
Not something I would do well, I don't think.
I tried sort of once and it didn't end well. Never tried again.
Wait, seriously? Okay. Like real heights or like, balance beam at the...
Oh no, like
park?
a slack line.
Oh, really?
Yeah, like 3 feet off the ground. I tried a second time and then never tried again. You notice I didn't say succeeded anywhere in there.
Yeah, yes. Well, I think that's, I don't know how we got on that, but all of a sudden, like, that is a good example of that, right? And two, going back to our, looking at just the reasons FIs may take certain strategies through, quote unquote, this modernization period of, what the traditional banking model looks like, right? Past experience is going to play into that as well. And if you've got folks who have tried other types of projects, one that always comes up for me, at least I always find funny. I kind of feel like I need an internal Slack channel to just like keep track of some of these jokes. But
Well, you've got one. Me down in the bottom left-hand corner. Where you write jokes to yourself.
Yeah. Nobody gets to see that, so you're good. But is, anytime we get into red lines with a financial institution, it's always interesting to me to see some of the things that come out of that. And a lot of times I'm always like, oh, who burned you? Like, you'd only ever ask for that if somebody burned you because of that. And so I think, all of those factors, as we, start with a very simple topic of just like, how do you make decisions about modernizing your financial institution? I mean, in 20 minutes, we've already gone down a rabbit hole where, we've opened up 10 different branches of, reasons why this becomes a challenge versus just, oh, everybody can just do this.
You want to open up an 11th branch.
Yeah.
There's looking ahead to the analysis paralysis of what do I do next? Going from the decision that we are actually going to change something and we are comfortable with that to what are the decisions we actually made and where are those solutions coming from?
Yeah. Well, okay. That actually brings us to one of the other kind of buzzword topics that you had brought up, right? I guess, well, in a roundabout way. You brought up the buzzword of AI, but you talked about how it's got to be actually intentional and use case based. And I think AI is just getting kind of lumped in with a lot of conversations around, large language models, AI, machine learning. I feel like a lot of times it kind of gets put in its own box. But, when we start talking about this kind of advancement in technology, I think a part of that is we're also looking to how can we set ourselves up for better success in the future of technology is actually moving faster and doing things a lot quicker in, reiterating than we used to be able to do, right? And so something that maybe used to be a manual process that took somebody 40 hours in a week to do can now be done by, an AI model in 4 seconds. So all of a sudden that changes the analysis paralysis of, well, if we make this decision, like it's going to be a 12-year commitment in making the decision, or sorry, a 12-month commitment in making the decision, and then 12 months implementing the decision. And then we got to be on that for at least 5 years because that's the contract, or the length of time we would need to go through to even just remotely think about putting ourselves through that whole 2-year process again, right? And starting to make things actually happen a lot faster, I would hope, is giving us the ability to have less of that analysis paralysis, to be like, hey, it's okay to make a decision now, knowing what we know now, as long as it keeps us going towards the trajectory of what the future could hold, as opposed to just I feel like I have to make a decision and the right one because I'm going to be stuck with that decision for the next decade, like we used to be.
That's it. That's the North Star. Where are you going? And do you know? We were talking a little bit earlier about the shiny object issue, and once upon a time when crypto was the big thing for banks to adopt, crypto trading, crypto custody, and how it's easy to jump on the bandwagon to go after a shiny object. And it's a little bit hard to think about what's going to be in the best interest of the FI in the long run when you may be locked into a contract, for example. Or if you're in a contract and you're coming up on renewal, what kind of decisions do you need to make and how quickly do you need to make them if you're going to move forward?
That would be a really interesting one. I'd love to, if you're a community financial institution listening and you implemented buy, sell, hold of crypto, call me. I'd love to have you on the podcast. I'd love to talk to you through that one because I'm genuinely curious, right? And it's just no, ill intention towards the statement, but I'm genuinely curious. Would you actually renew that contract again if it's coming up for renewal? And then if the answer is no, like what do you feel the fallout would be from your, end user base of that? Like what was the adoption of it actually like? And, how sticky was that product? But yeah, to your point, Tyler, I remember when it was all the rage. Like everybody was talking about, being able to buy, sell, hold crypto and digital banking. And we had lots of overnight fintechs pop up and some really awesome people with some really awesome products. But just unfortunately, you look at kind of how the market responded to that buzzword and where we are today. And I feel like it's probably a very different story.
Well, there's another piece of that makes me think. If you have a great idea or chase something new, how do you know if you switch it on, people are actually going to use it? Mm-hmm. And not just use it while it's a hot term and everybody's clamoring for it, but a feature that people are going to have and continue to think of as part of your customer experience over the next couple of years.
Yeah. But that leads us back to like, how quickly can you actually, make decisions, implement things, and then fail fast if necessary? I feel like this is a topic that comes up every once in a while on the podcast, and I reference have you ever seen the meme of like Elon looking up at one of the SpaceX rockets as it's blowing up, smiling? And it's like, this is somebody who's comfortable with failure because he knows he's learning from it. I'm like, or he's just crazy. I don't know, or something in between, right? But I feel like going back to what you were talking about the trust side of our industry, it's a lot harder for us to like look back at, an SVB
look at a rocket blowing up and say,
and be like,
great.
Oh, that was totally
we learned
fine.
Something.
We learned something. Like, yeah, I'm pretty sure like the executives of SVB are not looking back smiling going, oh, we learned something, right? Like,
well, and a lot of them aren't there anymore. It's hard to smile.
Exactly. That's the point, right? So we don't necessarily get to do that. So we're trying to kind of balance the risk side of things, but at the same time, like we can't be, paralyzed by fear and say, well, we're never going to implement something. I use the example for us. We were one of the first companies to work on like an Alexa smart voice banking solution.
I remember those days.
Yeah. Fun fact about us, like we were the ones that actually worked with Amazon to make it happen. Like we beat Capital One to market with a skill that could actually move money in the real world. All of this. We were so proud of it, Tyler. Like we thought it was the coolest thing since sliced bread. I loved it. You know how many people used it?
5.
Actually, yeah. You're the first person. Nailed it on the head. Like 5. And I think 3 of them were our CEO, right? Like complete and utter flop. It was useless. Right? It wasn't useless. It was a super cool product that worked really well. Like could have done all these things, but the market said no. Right? And sometimes that happens. But we took a ton of that technology that we leveraged and it's built into other things that have been far more successful, are setting us up for the future and things like that. But how do you kind of balance that process of looking at things and saying, okay, these are the shiny squirrels I'm going to chase, right? And then if I catch one and realize that it's no good, like how quickly can I get rid of it? And I do think that that's an interesting challenge in this industry where going back to like the whole trust thing is so paramount.
And then you have to build it into the organization, the whole concept of innovation, if you want to use the term, or evolution, iteration, which takes a certain amount of expertise that may be a little bit more technology focused than a lot of FIs are used to. And sometimes what we've seen are actually dedicated teams who are responsible for saying, we actually want to find ways to change the bank in ways that are going to be good for us for the long term. And now let's figure out how to both do the technology aspect of this, but also the strategy and the cultural diffusion related to innovation. Because if you have the whole bank, the whole FI saying, we want to keep on doing things the way we've always done them because A, it may be easier, or B, certainly it's safer. We know we're going to maintain trust in our customers. You end up with a potential roadblock that you need to get past that requires some pretty significant internal change that's unrelated to your technology.
It's funny that you use that the way you use that. So I recently had a recording of a podcast episode with Tyler Marshall from Prime Bank. And he literally has a sign on his desk, Tyler, and he held it up and showed it to me for the podcast that was like doing things the way we've always done them and a big red X through it. And he was like, through like our core conversion, our team had t-shirts made that had that on it. And it was kind of a constant reminder to our team that, yes, just because this is the way we've always done it doesn't mean that it's right or wrong. Like it could still be right. But the important thing to note was that we need to validate that every time and not just make the assumption, right? That, hey, if this is how we've always done it, that it still works today. He's like, it may very well, or it may need to change. And if it needs to change, we as an organization need to be okay with that. And that needs to come from leadership, that it's okay to change things the way that we've always done them. But you have to have that mindset.
I love the sign and the t-shirts. I love the commitment that shows.
Yeah. I mean, he was like, you know, it's something that it has to be a part of our vernacular because of the industry that we're in. Because this industry is so incredibly focused on, you know, building long-term trust and is a long-term industry. And like you said, like this deals with people's money. You kind of can't screw around with this. But at the same time, we kind of can't rest on our laurels and just say, hey, we can continue to operate as the bank that we started as 100 years from now, and we'll be just fine. I was like, it's not the case.
Well, earlier you were talking about the fact that you were talking earlier about how we had big tech competition, for example, or this evolving consumer expectation related to technology outside the bank. And while you may not be able to run at the same pace from within an FI, when you have this mindset of continuous change, continuously moving forward and knowing what that looks like, then maybe, even if you can't move as quickly as everybody else or as quickly as you like to, you can have this marriage of risk management and innovation that's going to help you in the long run, and perhaps if you're the FI that makes this commitment to thrive.
Yeah, well, and like you were mentioning, like seeing teams like that actually form inside the FIs is pretty cool. I do feel like that's a change I've noticed as well, just in the last, decade. You're starting to see more teams, we'll get on calls with banks and credit unions now where they're like, hey, we are the team that has both the background and the skill set and the direction and the empowerment to go interact with technology, right? And to be kind of that conduit. And I think it's a really important balance in, the industry that we serve, that the financial institution needs to be really good at being a financial institution and understanding things like regulation and products and services and, the relationship and the trust that they have with their consumers and all of that. But they also need to know a little bit of technology, right? They have to understand some terminology. They've got to understand the landscape. They've got to understand like what's coming down the pipe and what are some of the, consumer expectations driven by big tech and fintech. And then at the same time, you need, the technology companies that are servicing them to be true tech companies that operate and think and move and act like tech companies, but also have an understanding of the industry that they serve and understand what a bank and a credit union is and understand what they're dealing with internally in, yeah, we'd love to do that, but just unfortunately our risk tolerance says we can't. That just doesn't meet our risk reward criteria. And then they have to find that way to like mesh in the middle well enough to make some cool things happen.
Well, you just talked about the bank being the bank, and there's a whole partnership aspect to this as well. When the buck stops at the bank, the FI, for anything that goes wrong with a partner, which may be assisting them with innovation of some kind, whether it is a distribution channel partner like in an embedded finance sense, or whether you're looking at a new AI system and trying to understand how that works and vet it, as a compliance team that may not have the depth of understanding or experience to say, we are comfortable with this, we know our regulators are going to be comfortable with this, and nothing is going to blow back on us in a big way as we try and look ahead.
Yeah, I'm really glad you brought that up, because while you're talking, I went and looked, and it was actually literally just, 6 days ago is the time of recording this episode. You just sent out one of your newsletters was talking about like seeking stable modernization, right? So what does that look like to you? Like, what does seeking stable modernization mean?
Stable modernization first is about priorities for the FI. We talked a lot about risk management within a comfort zone for the FI based on its strategy and its existing technology stack. What's important for the financial institution to do in this context is to say, we know and understand everything that's going on with our technology, and are able to say, we have, within a reasonable degree of certainty, an idea of what's going to happen when we make certain changes, and what's going to improve, and what possibly could be our downside risk of making this change. A lot of it is about this planning process, given an understanding of what they're working with. For a lot of smaller FIs, the challenge is going to be their governance is probably not going to be so robust, especially if their older core systems are running a programming language that's decades of years old. They haven't really, at a leadership level, thought about what they need to do to modernize. So I would say it takes this self-insight within the financial institution, the understanding, the detail orientation to figure out what it's going to take to change things in ways that are not going to affect customers in a negative way, that are not going to lead to operational failures at the bank, that are going to, I guess, be an issue for customers, but also raise the ire of regulators. Mm-hmm. And then over time, you were talking a little bit earlier about commitment, the sign on the desk that says change is constant. We need to keep moving forward. And whatever gets in our way has to only be a temporary roadblock. Because if we see something and it says stop because it's too risky or it's going to cause a problem, then that's not a point you want to end at. Because that says within our technology stack, within our technology strategy, there's something happening here that's keeping us from thinking about our North Star, the goal we actually want to get to.
Yeah, I like that you bring up, it's all got to come back to the strategy. And I think that goes back to what we were saying earlier of just like, that's why this can't be one size fits all too, right? Mm-hmm. Is, well, yes, for all intents and purposes, if you boil it down really, really simply, the vast majority of community financial institutions here in the US are doing the same thing, right? So where you're differentiating is kind of your strategic objectives in how you're approaching maybe doing the things that we all do in a very commoditized market. And so if you're looking to do change, but it doesn't align to your strategic objectives, then it's probably going to fail from the start. So you have to start there. Like, what are our objectives? What are we trying to accomplish? And, you touched on this when you brought it up. I think that's a big part of the problem with buzzwords. And like AI is the big one right now. And I actually just posted on my LinkedIn last week, and it's gotten a ton of like comments from people sending me messages and things that was like, You remember the scene from Wolf of Wall Street where he's like, sell me this pen, you know?
Oh, yeah.
And so it's the guy saying, yeah, sell me this pen, right? And he holds up the pen. And then the meme is, it's powered by AI. And then the caption was like, every freaking company right now. Right? And it's like, it does. It feels like everybody is like AI this, AI that. AI is all the things. But,
well, it could be powered by AI
it could
is
be.
the thing. It could
Totally.
be powered by AI.
But how?
But if you use AI as the overarching term, what does that really mean? Because, I mean, AI, when you call AI, it sounds like a commodity, even though ultimately it's not done properly or done in an interesting way.
Yeah. But I think it's like any, I hate to use the term buzzword. I think buzzword itself is a buzzword. But like whatever the thing is this year, and sometimes things span multiple years, and sometimes there's multiple things in years, but there's always some big thing, right? And I feel like you always get an idea of what that thing is when you do go to conferences and things, and you see like what's all the new signage from the vendors saying, right? And then what are the keynotes talking about? What's dominating the agenda in terms of, a specific topic. And, for whatever it is, it's whatever that thing is, it usually does mean a lot of different things to a lot of different people, right?
One year we had crypto, then we had embedded finance, now we had AI. What's next year?
Yeah. Well, and that's a good point, right? Like embedded finance, open banking. That also is similar to AI in my humble opinion, which is that can mean a lot of things to a lot of people.
Big overarching term with a lot of practical issues, a lot of applications, and I think actually a lot of, maybe not a misunderstanding, but a lack of common definition. Mm-hmm. That's the issue with buzzwords is you use them for a common understanding or a common vernacular, but as a result, sometimes you get a term that's so high level, not everyone knows they're talking about the same thing.
Yep. Yeah, I remember.
Digital transformation would be another one.
Yeah, absolutely. I remember when open banking was like kind of the big buzzword, and not that it's necessarily gone away, but just it was kind of the like predominant one that we were talking about. I used to laugh and say, if you ask 5 people what open banking means, you'll get 6 answers. Like, it just depends on who you ask and what their frame of reference is. I think the English language as a whole is really both good and terrible at that, is that like a word can mean a lot of things. It's the context around it.
It's very malleable in it, isn't it? And some days that's a downside.
Yeah. But yeah, if you just make a comment and you're like, yeah, we have a strategy on open banking. Like, okay,
it's like your AI strategy.
Yeah, I have an AI strategy. Okay, what is it? We were talking about some of the examples of just how we use AI in like our personal and professional lives. But yeah, saying that as a, overarching statement of just your organization, like we're going to use AI.
I would say, how is AI an enabler for certain tools that you do use or want to use?
What are some of the interesting use cases you've been seeing pop up?
Some of the most interesting use cases, actually, I saw last week. I guess you better scratch that because it's not going to be last week by the time you're publishing this podcast. One of the interesting use cases that I've seen is internally for FI's observability of data. And that can mean just the aggregation of data from within the financial institution that may exist in different silos. But on top of that, it's enriching the data in the way that it can be segmented, analyzed, and usually create these predictive models that are actually going to tell the FI something about their customers, what their needs are going to be. And I think it's really important from a data management perspective that we think of AI in one context, in that way. It's how you better manage the data that a financial institution has. Because when you're thinking about AI as this big modernization concept, it's also this nudge for something like, well, we have a lot of data that an AI model could use for certain things, but because our tech stack is so old with little pieces and parts plugged in over so many years, it's not actually accessible by the same system, and therefore we actually can't use it in the way we want to, even if we have these fancy new systems that say they are AI driven.
Yeah, that's a really good point. That brings up a really good point. I mean, it is trying to get as much data into it as possible, which, is a challenge in and of itself, depending on what your tech stack is and what your, data architecture looks like today and in the past, depending on how far back you want to go. But I mean, I think even just in my own personal life, like that's been one of the good examples of how AI has changed how I think about reviewing data, right? And just think about a simple Google search, right? Like if you go in and search something in Google, actually fun fact, I'll give you a fun one that happened literally just yesterday. Yeah. So we'll go down a little side rabbit hole on this one. So my last name is DeTar, and it's DETAR with a capital T. And my dad has it DE space capital TAR. And then I'm the firstborn male in the family. And as I got older, Tyler, like I kind of, was using my last name at the time when computers were starting to become a lot more prevalent for records and things. And so I got so sick and tired of being called like first name Duh, last name Tar, that I smashed it all together. And I've just run with it ever since. So actually,
legally, or you just did it?
I never formally legally changed my name, right? So my birth certificate has DE space TAR. But my passport, my driver's license, all of my documentation since I started signing documentation all has it as one word. It's never come up. It's never been an issue. Watch tomorrow. Now I'm going to get totally screwed on something, and they're going to ask me to pull up my birth certificate and my passport, and they're going to show they don't match, and I'm going to get thrown in jail. I don't know. But
you're going to stay at the DMV for 2 hours, and then they're going to tell you the form's not good.
But it's never caused a problem for me. Smashed it all together. My little brother is 4 years younger than I am. And what started this whole conversation is my little brother and his family are here in town visiting from Tennessee. And we were all over at our house yesterday. My dad, my brother, and I, and our families, and all the kids are playing. And somehow we got on this like conversation of how my dad and my brother have it with the space. I don't. And then we were talking about like, where does our name even come from? And my dad goes, yeah, it's French. And my little brother and I both, without skipping a beat, Tyler, are like, what? No, you used to tell us it was like Danish or Belgium or something like that. Like we've been telling everybody it's that. And my dad's like, oh, no, it's definitely French. And my brother and I don't feel like both of us would remember, like one of us would agree with you, one of us would disagree. Like why all of a sudden is it French? And so
I can see where you're going with this.
I went to Google and I Googled like, what is my last name? And it just gives me a bunch of useless results. And so I was like, no, I'm gonna go to ChatGPT. And I went to ChatGPT and I said, hey, where is this last name from? Right? Immediately, the funny side of it is, it's like, you're French. I'm a little further.
But do you believe?
But so what's interesting was I gave it a very simple prompt of just, where do you believe the surname DeTar originates from? Mm-hmm. And it says, hey, based on all of these things that I'm pulling, this sounds and feels like a French last name for these reasons. And here's some examples of that. And I was like, that checks out. That's pretty valid. But then we kind of went down a rabbit hole of feeding it. And it literally ended the prompt its response with, but if you feed me more information, because surnames can be so wildly like changed and all of these different factors can go into it. Like if you feed me more information about your surname, I can help, refine this. And so we did. We ended up having this whole long conversation with ChatGPT to try and figure out like where our surname was from. And yeah, my dad's probably right. It was probably French, right? At least as we went through that. But it was just interesting to see how, because technically Google and ChatGPT have the same data, but it was just how it was looking at it and aggregating it. It gave us a far better response to the question of just, where does my last name come from? So if you think about that in terms of, that's a really long example of getting to, like, if you think about it as a financial institution, if you're Googling your internal data, like, what are my members, what are my products are my members, not using that they should? Versus if you're chat GPTing it, you're probably going to get significantly more useful insights. So yeah, feeding it with data and then saying, okay, we have, an AI strategy to help us understand and analyze larger subsets of complex data where I don't have to try and pour through this and apply my human logic to it. I can apply, machine logic to this to help me distill down a lot of complex information into something that we actually can start to put into, our strategic roadmap and say, oh, actually, we've fed all of our data and we believe we have good, clean, and holistic data into a model where we've been able to run, AI level analytics on, and we've identified that there's, a product that we offer that would provide super value to this subset of customers. Therefore, we're going to have a strategic initiative to get this product into these customers' hands, right? I mean, that's a little bit different conversation or a different statement than just saying, like, we as an industry need to use AI more.
And that's a long story, a long path, going from data to being able to observe it and understand it and use it, especially within an FI's tech stack. But there's so much good data in there, and it's just a tragedy that so much of it is locked up in different pieces.
Mm-hmm. Yeah, well, and that goes back to what you were talking about with just kind of even some of the like core and underlying system modernization, right? And
there's the core and underlying system, but there's also I would say the silos within the bank too that are associated with the technological systems. And so you have departments which are associated with technology, and you combine those two together within the bank, and there's less of a push to have this holistic view of the data when only one group of people is using it.
Do you have an example of that?
So let's say that you have a consumer lending team that's just working with a piece of consumer lending technology, a consumer lending module. All of the analytics off of that, assuming it was installed a long time ago independently, are going to feed into the use of that team, the team that is selling, managing, administering the product, because they're the ones who use it day to day.
Yep.
And for them, there's no organizational reason on a regular basis to say, we want to make sure our system is available to other parts of the institution because we know somehow it's going to be useful for them. But when it comes to the strategy level, as you were talking about, if you have a way to bring this data together, then there's this high-level analysis of the customer that may go across different products which are associated with different pieces of the bank that, for now, in a lot of cases, you can't get otherwise.
Mm-hmm. Well, that kind of comes all the way back to one of the conversations you brought up with the buzzword of open banking too, right? And even then, let's say we've got a good holistic 360 view of how many buzzwords can we cram into this episode? I don't know. Should we do? Somebody should have a
clicker counted while we're at it. Yeah.
Like if there's a drinking game that comes out of this podcast, I apologize for anybody who blacks out on their couch.
There is one, I'm sure. There is one being invented as we speak.
Right. But, with having a good view of your data, what's my relationship like with Chase or with Chime or Venmo? You don't have that data, right? So
you certainly don't.
Or maybe you do, or are you piecing it together? But how, when we start to say, I have a holistic picture of all the data for this person, just how far does that sphere really go out, right? And that's where we start to have the conversations about things like open banking and having access to more information could also change that. And then are you even prepared to deal with what's going to come out of that? And again, now you're talking the regulation, the trust. So this is a pretty complex topic.
Well, and then you have to think about the consumer versus the FI side too. When you think about the bank, the data has on the consumer while in theory there's a lot of information, and with financial information, something that oftentimes nobody else, unless it's another financial institution, is going to have. But there's also the read portion of that data. You connect a fintech or an app through open banking, and one of the big fears for FIs has been, well, can we actually get this information out of our tech stack, out of our ledger, in a way that is going to be secure and stable? It's not just a matter of whether they can get it out and use it themselves. There's a whole other layer of being able to push it out to some third party.
Mm-hmm. What are some of the, I don't want to call them successes and failures, but what are some of maybe the different things that you've seen on the positive and negative side of the open banking kind of initiatives here in the States?
I think a big positive for open banking has been what I actually call quasi-open banking, because it is not truly open in the sense that there is a policy around it. But it's the development of data sharing APIs over the course of the last decade, evolving from screen scraping, which is having a fintech use an aggregator to log into a bank account and just pull information, whatever it can see, to two-sided APIs in which financial institutions have some sort of control over the data that they pass along to apps, and then consumers have this more stable, robust connection that allows them to pull their financial data into the app that they're using. I can see how, from a technical perspective, though, that is a challenge. With the CFPB's rule coming up, there's this trepidation that over the compliance deadline of the next couple of years, what are they actually going to need to be able to do, and actually what are they going to be able to do when they're creating or buying the solutions to meet this compliance. There is a success in a certain sense when you have some of these larger financial institutions that are building their own APIs, or maybe in partnership with some of the aggregators. You have vendors or other financial institutions who are saying, yeah, we really want to be on board with this. But I would say it's still very much in process.
Mm-hmm. Yeah, I mean, as a non-techie, this is one of the things I feel like kind of comes up in my head a lot is, when we talk about open banking, one of the things that needs to really, happen for this to be implemented properly, as you say, is, if we're making connections from one institution to all these different things, and then all these different things to all these different institutions, is having some standards, right? And it's all well and good if Josh has his standard and Tyler has his standard, and Susan has her standard. We really don't have a standard. And so it makes, the complexity of that spider web grow pretty exponentially, pretty quickly, when you're saying, well, I have to, when I want to accomplish open banking as I'm supposed to with Tyler, I have to work with Tyler's standard. And then when I want to accomplish it with Susan, I have to work with Susan's standard, as opposed to...
Have you seen the comic from a long time ago now, where there's this guy talking to another guy, and one of them says, well, there are 6 standards for this, and we should create the one standard to rule them all. They come in with this lofty goal, and guess what? There's 7 standards now.
Yeah. That's pretty funny.
And I think a big part of the growth of the aggregators, Plaid, MX, Finicity, has been the network effects. Just by increasing the size and the number of their connections, whether it's on the fintech side or whether it's on the bank side, has meant that there is, to a certain extent, these private standards that exist. And then there's the industry body, FDX, which at least has a template for the API standard, which ideally creates this push for standardization. I know the CFPB has said something like, we want to have this recognized standard setting body so that they can at least nudge the industry in a direction which I would argue it already really has gone, in which if you say, I'm going to plug into an open banking API, there is a technical openness as well as a kind of policy openness.
Yeah. Well, and I think there's even a third piece to that too that I'd be curious to get your thoughts on. And, this is probably, hate to say it, but a shot at some of the larger, older incumbents, right? Is there's probably a revenue effect to this too. So thinking about how we do this, or just how open we are, or, who and how we play with, that can have big impacts on revenue as well.
That's part of the fear.
Yeah. When you're in, a private capitalist environment like the US versus, you look at how open banking has been enabled in other countries, right? There's lots of big factors into why and how it's been implemented. Everything from, government regulation to just what the economy is like, to kind of the culture and philosophy of working together is like. And, America is such a melting pot. I think, in my humble opinion, that's what's creating some of the slowdown of just, here's the standard, everybody's doing it, go, you're done.
Melting pot with thousands of financial institutions.
Yeah. Versus just a handful, right? I don't know this data. I should know this data, but all I care about is the US, I guess, in a lot of regards. But I wonder why, do you know where we would rank in number of FIs per capita, to other countries? I have to imagine we'd be really high, if not first on that list.
I imagine so. When you have how many thousands? You said 7. I think it may even be a little bit higher in the United States for 350 million people.
Yeah.
But then in Canada, you have maybe 5 really big ones and 2 smaller big ones for a population of several hundred million, I imagine.
Yeah. Yeah. I mean, how many, you think Europe, China, not many.
It's a pluralistic banking market.
Yeah. So that in and of itself is going to create a challenge for us versus, hey, the 5 of you need to get together and pull off open banking between the 5 of you.
Which in the UK, the government could just say, and kind of it happened.
Yeah.
You say the CMA 9, I think it is, the biggest financial institutions, you say you have to adopt these standards, and well, that's it.
Yeah. So I know you said, I don't think you said this actually on recording, but you were talking about how 1033 is just a part of it and maybe not the biggest thing to talk about. But I do think it's worth, would you mind just, for folks listening, what is 1033 and what do you think it means?
1033 is a little section in the Dodd-Frank Act, which says, in short, consumers have a right to access their financial data. And it has been interpreted from that little section of text to a several hundred-page document from the CFPB, which defines exactly what data should be made available, how it should be accessed, and then what the parameters are for compliance, in short, when it comes to this right to data access, as they've referred to it. And as we've been talking about earlier, it has this whole downstream impact on these FIs who have not necessarily embraced open banking, but have accepted it as part of what the industry is doing and have decided that they're going to create these developer resources to at least have these basic connections between fintechs, third parties, and then the financial institution.
And so you were talking about some timelines. So why is this significant now? And what do you think are going to be some of the milestones that are going to be important?
The CFPB actually published proposed deadlines near the bottom of its notice of proposed rulemaking, and it's pretty early after the final rules published in the Federal Register for the larger banks, coming up within 6 months, I think, and then expanding out to over several years, depending on the asset size of the institution. So for the community FIs, there's a much longer on-ramp for open banking. But when you look at some of the modernization arcs, the amount of time it takes to even make small changes to the technology, you wonder, is even a couple of years going to be enough to comply with open banking? Or is open banking compliance going to set off a domino effect of something else that's going to need change at these FIs that then is a whole other project?
Yeah, I mean, if I, venture a guess, I think it's going to be the latter. Kind of to what you were talking about earlier, right? I mean, just being able to connect all of these different systems and, right, wrong, or indifferent, it is what it is. But sometimes, smaller community financial institutions just don't have the budget, the staff and resources, whatever it may be. And, maybe they are using a smaller provider or an older provider or product for something that they're fully reliant on. And maybe that provider can't even move within the timelines for open banking. And maybe that's only one piece of a very complicated puzzle for that FI. What does it look like if, today's your day, you've got to comply with open banking and you're a community financial institution, you're just still not there yet. You're just not able to do that.
Saying about open banking compliance. And what they said to me was they are asking us for help. Now, granted, it's a bit of a colored opinion because it's coming from a vendor that's involved in the implementation of open banking technology. But it did ring home a little bit for me because you have all of these smaller institutions who do not have the technical chops, do not necessarily have the tech stack or even the up-to-date vendor resources that they need to comply. And on top of that, they don't have the strategic component to be able to adapt to it. And they're saying, well, we don't know what to do. So what next? Who even ask? What happens?
I think there's a lot more unanswered questions than there are answered for small community FIs in navigating that. But I think this is going to be
answered.
What's that?
A lot of questions that'll be answered for better or for worse.
Yeah, totally. But I think this is going to be one of those buzzwords that's going to last a while, right? Because we're going to have to keep talking about it. It's going to have to keep refining. And this kind of brings us back to, we're kind of at a place where community financial institutions, you kind of don't really get a choice anymore. You have to pick vendors that have, the ability to, evolve and innovate. And, there's another good buzzword, innovate means a lot of things, but have got to be able to adapt as the changes to the ecosystem come into play. And, if you don't have all the answers and your vendor doesn't have all the answers for open banking today, they've got to at least be architected in a way, and that's not just on the product side, even just the type of people that run the organization in a way to say, about. What's that?
All the things we've been talking about.
Yeah, that say hey, I'm able to make the course corrections as needed to make sure that if we are your vendor today and we are your vendor when you're required to comply with something like open banking, that we'll be able to get there. We'll be able to navigate that. We don't have the answer today, but as answers come out and things get refined, we'll be able to get there with you. Is that a fair assessment?
I hope that's a fair assessment. I hope everybody gets to the finish line on time and intact, whether they are a vendor or an FI.
Yeah. Any guesses on what next year's buzzword will be?
Oh man, the thing about buzzwords is they just seem to pop out of nowhere and suddenly everybody's using it.
Yeah.
Before they know what it means sometimes. Check in with me next year.
Okay. follow the newsletter. That brings me to an important question as we kind of wrap up here. Where do you go to get information about what's happening in the industry? What kind of informs a lot of your research?
Keeping an eye on the news generally through a news aggregator. It's a lot to read through every single newspaper and every single article. I don't. To get an idea of what objectively is happening within the industry, and another piece of it is to keep an eye on social media, thought leaders, newsletters who are distilling all of this information that's in the news and creating an opinion about it, oftentimes in a shorter format, which may or may not be right. I may or may not agree with it, but it's about bringing together both information and opinion that's out there in order to assess and create my own idea of what I think is going on.
And if people want to connect with you and talk to you about what is going on, or if they want to learn more about CCG Catalyst and what work you guys are doing there, how can they do that?
You can find me on LinkedIn. You can subscribe to CCG Catalyst Insights at ccgcatalyst.com/insights.
And I would highly recommend you do. I'm just throwing it out there. Like, Tyler and his newsletter is one of my go-tos. I get a lot of things that sometimes just, I mark as read and move on. And I definitely make sure I set aside the 60 seconds to run through what you send me. So, I really appreciate you giving me the opportunity to actually bring you on the podcast too, Tyler, and just kind of like talk through this stuff in long form, as opposed to, like you said, just sometimes digesting the bite-sized bits, but actually getting to like talk through the concepts and what's happening and what kinds of things you're looking at. So thank you for taking some time and coming and being a guest on the Digital Banking Podcast.
Thank you for listening to the Digital Banking Podcast powered by Typhon. Find more episodes on digitalbankingpodcast.com or subscribe on Apple Podcasts or wherever you get your favorite podcasts.